Hey traders, Nick Chahine here, recapping the day and the week ending in February 27th. Friday, expiration. Scoreboard for today, red. Chalk one up for the bears. Minus 0.45 to zero point 0.5 across all the indices. Let's cut it short. And for the week, all indices, for the month, let's start with that. All indices had the best month in about 2 to 3 years. So take your pick. They had a great month. And as far as the week, it was split. A push on the NASDAQ via the triple Qs, if you look at that, kind of a doji. Same deal with the S&P, maybe a little red on the S&P, a little green on the NDX. So let's call them pushes. The IWM, the small caps, had the best week of all of them. And as far as ranges, let's start with that. Usually I don't start with that. I'll start with that. The ranges are, the trends I should say, are starting to look a little droopy in the S&P. And let's look at the SPY, for example. What do I mean by that? Okay, we have the upper end trend. We've had 3 red candles back to back, so that's 3 red days. However, you can definitely see a droop, right? That doesn't mean that it's the end of the world. It just means it's something to pay attention to, that maybe if we're trading this green and this red, maybe we want to approach the green one a little bit for now. Breathing. Okay, is this evident in anything else? Well, let's look at the Qs. The Qs, it shows not a droop, however a leveling, meaning like the last 3 or 4 candles I can draw this line above them, so it's leveling off a little bit. That doesn't mean also that it's going to break down, however it has the setup for a breakdown, okay? Today's candle, not pretty, opened high, closed low, not at the low of the day, but low. How about the S&P? I didn't, SPY did close on the low of the day, almost at the low of the day. That's not good. As a matter of fact, let's zoom in a little bit so we can see that little more prominently. That candle right here, almost at the low of the day. That's bad news. Lastly, I like to look at the small caps because they call them the canary in the coal mine. Absolutely hideous candle today. Not the end of the world. However, every bad drop starts with a bad candle, right? Most likely. It has had a few bad candles that didn't end up in a bad situation, but here's one that did. Here's one that didn't. So I won't short the market based on that, but if I'm short the market, I'm feeling much more comfortable. Again, there's no drooping yet. There's a leveling of sorts, and it's looking the most bullish out of all. However, that's 3 weeks in a row where big money is lost on calls. Some big bets were placed on calls starting at 1240 through 1260, and all of them fizzled to nothing, went to zero. So somebody lost a lot of money out there. Not me, I was seller of those. Okay, so what happened as far as intraday today that can tell me something about the week and the sentiment? Sentiment is shifting a little bit, meaning less exuberant. Like today we had good news about Greece, and Greece doesn't even matter, we didn't even pop. And today the moves intraday were based on economic reports. That's fantastic. Fundamental trading, can you imagine? Oh my gosh, I can't remember when we did that last. So that's really good. So now we focus on rates. And today Fed Fisher came out and said most likely we're going to be raising rates this year. So maybe that's what depressed the markets a little bit. And if that's the case and we only lost 0.5, you know, the bears might be in trouble if this is it. Okay, this was the last day of the month, so people saying this is balancing, rebalancing, closing books, all of that, booking profits to show a great month. We'll see what happens on Monday. Monday we have some economic reports as well. We have 3 days to have some headlines. So without any headlines on Monday, we should come in maybe a little negative bias, maybe flat. But if nothing happens, maybe a little bit of green, some sort of a bounce. The VIX today was down 3-4%. Doesn't make sense to me. A few things that we need to pay attention are the rates. Today, the 10-year rates was looking fantastic, ran up to on the TNX 20.49 and then closed barely just above 2%. So it's a down day for the rates, and we almost lost a 2% yield on the 10-year. Conversely, when the rates go down, the bonds themselves go up, represented by the TLT, had an amazing rip in the middle of the day to close up, if I see it from here, 0.84%. That's a fantastic day. And another thing that played a role today is oil. You know, some shenanigans in oil, whoosh, wash. Overall, it's playing with fire. It's still under 50. Yes, it was up 2% today, but it's under $50. Why? I don't know. It is an economic war going on, and I think the people who are fighting it are losing control. And now I think market makers or big money is using it to whipsaw markets a little bit, meaning they used to use Apple in order to move markets and profit in the indices, a dog that wags the, the tail that wags the dog. Maybe now they found a new vehicle to wag the dog, which is oil, because when oils run, markets tend to run. But we'll see. That's just a theory on my own. Speaking of Apple, a bad day in Apple, pretty bad day, down 1.5%, and it was saved out by the bell. So were the markets. It was saved. I think that Apple had the potential to lose $5 from here had it lost this level emphatically. Okay, that's just my own theory. I am short Apple, so take it with a grain of salt. Short via puts. I can't do credit spreads in Apple from here. Long term, it's a fantastic company. It's going to be higher. This is a short-term trade for March. Too far, too fast, whatever you want to call it. All right, so let's look at some tickers there. What do I do next week? What do I do next week? For me, I'm trading the indices like there's no tomorrow, and I'm doing credit spreads because this meander, like not going anywhere, not falling anywhere, is perfect for selling spreads. And iron condors work best. So that's when I sell credit call spreads and credit put spreads to bring in some income and call it a day. And that's all I really need to do. If I wanted to invest in a few stocks, I just can't follow anything at these levels. I cannot chase a stock that runs this much in this few days. I can't do it. And this is an important level for Apple right here. Lose that, and we'll see what happens. I just can't do it. Google might be shortalicious starting to be, especially that this candle got rejected, and look at where. This candle is a breakout, but barely off of this. So there's plenty of way you can interpret this action for Google. It is bullish that it had such a fantastic day on a bad day in the market. So I like the company. I love the company. I love to go long it anytime they sell it. So anytime you see a drop, I'm long Google, right? But up here, maybe not long Google, maybe some credit call spreads. Not doing them yet. Another one I may want to short is Amazon. Why? Because I may be able to pick on it if I zoom out. 2 years maybe. That'll show me better. I had this as a target a while back, and it touched it, and then it's fading. So how it handles this tick, the 380, is telling. It's not a scientific line. It's just my own line. So credit call spreads up here could pay me some premium in order for me to wait. And if I'm really bearish, I'd sell the premium up here, buy put spreads, so I'm short with somebody else's money. The only risk is if Amazon goes to all-time highs, then I may lose some money on the credit call spreads up there. So this is my take on what I'm doing. I'm selling premium. Yes, the VIX, people say, oh, the VIX have dropped so much, so why are you selling premium? I really almost don't care about the VIX. I had that debate today. As long as I can get the premium I want, the yield I want on the risk I'm taking without dropping my standards for safety. In other words, I need a theoretical chance of success, a particular one. If I don't have to drop it and I still get the yield I want, 8% on my risk or whatever I want, I'm happy to take the risk regardless of where the VIX is. The only time the VIX affects me if it drops so low that I can't even find premium within my risk of incident tolerance. Then it's a different debate. So the VIX, yes, is low, but it won't stop me from trading. I'm not going to close shop and go home. All right, so this is Nick recapping the week and recapping the day first. So if you have any questions on that or anything that you want to learn about credit spreads or anything like that, you know how to message me. I'm here. I answer all questions. One last thing, forgot the TNX and the TLT. TLT, but we played it perfectly. Right around here, I said it has $10 in it to 137. It took 137, got to 138. And right here, I said sell it. 126, I said buy it. And I would still keep it if I'm buying it because I'm still green in it. Maybe I'll tighten my stops. But I like this green trend right here. Conversely, the TNX, they move opposite each other, those two. Okay? My theory here is that if this is really a lid in the TNX, this is a yield resistance. If that's the case, then the markets have a lid as well. And I said this is a lid, and it sure worked. Bonk, kissed it a couple of times. And now, are we trading this green trend? If so, then markets have some downside, unless they want to ignore the usual relationship of TNX and them. That was my final thought. All right, enjoy your weekend, folks. I'll see you next week.